Yo, I'm live. What up, Hyperchange? We're gonna do a live earnings reaction. I'm in SFO right now because Tesla delayed the letter per usual. Matty Mogul can't be featured, but I'm gonna get him on the channel again soon, so sorry about that. I'm gonna tweet the link to this video really quick, and then I'm gonna give my reaction on, I just read through the whole letter super clearly, and then want to give my take on the numbers, and then get a bunch of questions from you guys, but first I'm gonna tweet the link to the video. And if you want to check out Tesla's investor letter, go to Tesla's investor relations page and click on the Q1 2019 letter. It should be posted right there. It's up, it's live. You should pull that up as we go over it. I think that'll be super helpful. So I'm just going to tweet the link. Hi, Mosuku. Can you guys hear me okay? Okay, so here's what happened. So Tesla just reported Q1 2019 financials. The numbers are, let me pull up we're looking at 4.5 billion in revenue, which was down from 7.2 billion in Q4, but up significantly from 3.4 billion in Q1 of last year. The loss of EBIT, operating income, was negative 521 million. Net income was negative 700 million or so. And so my estimate for this was 4.8 billion in revenue and a loss operating income of negative 335. So we got 4.5 billion with a loss of negative 500 million. Yes, I am in an airport. And so a little bit worse loss than I was expecting, but if you remember in my Q1 preview video, the most important number is cash. You know, this was the quarter where Tesla had so many headwinds converging. We had the international deliveries starting, which meant there was like a bunch more vehicles in transit. We had the tax credit cliff ending. We had the S and X dropping to 75 kilowatt hours. And there was just, you know, that wave of initial Model 3 demand that the backlog had finally been exhausted. And so despite all of these headwinds, like, I think this was the worst quarter for Tesla, and the numbers aren't that bad. Like, they're gonna survive. And so for me, the most important number was cash. They also paid that $920 million debt payment. So they ended last quarter with around 3.7 billion in cash, minus the 900 million debt payment. You know, that put them at like 2.8 billion, and then whatever they did this quarter. And so I was estimating they would end around 2.3 billion. And then after looking at the worst deliveries, I was like, okay, maybe closer to 2 billion, I think was my last estimate, and it came in at 2.2 billion. And so that's the most important number to me, is Tesla's cash position is really, really strong. I actually have a bet with a prominent short seller who bet 1.5 billion, and he's wrong, so he owes me beers, so I'm pumped about that. But I think overall, the delivery numbers, you know, the financials suck because we knew that the deliveries and production were not as good as we wanted, but I think it's not the end of the world. And in terms of guidance, Tesla's guiding to deliver 90 to 100,000 cars next quarter, and they think that may be conservative according to this estimate, and they're guiding for a loss in Q2 and a return to profitability in Q3. Now this is really important because Tesla actually previously had said they were going to be profitable, maybe only not in Q1, but now it looks like that this lack of profitability will extend to Q2, although they are saying they're going to drastically cut back on the losses. And then in Q3, they want to expect to return to profitability every quarter's going forward. Oh, the conference call is starting. You're right. All right, I'm going to wrap this up. But the point being here is Tesla is, you know, the numbers aren't as bad as I think people, you know, we knew they were going to be bad. They're bad, but it's not the end of the world from Tesla. Everything's going to get better from here. Super pumped on autonomy. I think energy numbers looked really weak, but I think they're going to bounce back. They're still guiding for huge growth in that. And so I think Tesla overall is still in great position. This was the worst quarter. We hit rock bottom. And the bottom line is the numbers aren't looking good, but they're only going to get better from here. So we're going to get, the conference call should be starting any minute now, but I'm assuming they're going to be late with that too. So I'll keep taking questions. If any of you guys have questions, let me know. I'm in SFO right now, and I'm flying to New York. I booked this trip for the Autonomy Day before knowing when Tesla earnings were going to be, so I'm going to be on a plane in like an hour, and then I'm going to go home and I'm going to record a full Tesla earnings video as soon as I get back to New York. So I hope that'll be published here on the channel. When I get back to New York, that'll have all the charts going through every single numbers. I'm going to go through the conference call, give the analysis of the call, which is starting right now. So make sure to check that out when I post that either way later tonight or tomorrow. But anyway, yeah, I gotta run to my flight in a sec. Does anyone have any questions? I don't know. I'm seeing a bunch of people sign off because I guess you all are going to the conference call. I guess the other biggest thing that I thought was the inventory numbers. They do a chart Tesla's inventory based on inventory for other car makers, the inventory problem is not as bad as I thought, and this is part of the reason why they didn't burn as much cash as I thought, so that's a really good tidbit and a silver lining. Anyway, let's get on the conference call. We're gonna learn a ton more, and stay tuned for my full review video coming out soon. Peace out, Hyperchangers. Keep it real. You guys are all awesome.